high multiples on some of these AI names like Nvidia. One of the reasons my next guest just trimmed his exposure, although he does believe in the AI growth story long term. Let's speak with Steve Auth. He's Chief Investment Officer of Equities at Federated Hermes. Steve, it's great to see. Wow, look at Nvidia down 7. Now it's at 108. And you were on this a couple of weeks ago. So walk us through the thought process.
Nvidia share prices have taken quite a tumble over the last few weeks. This is a phenomenon that we've been covering in several trading analysis videos here. And with this video, we're going to sort of look at some important support and resistance levels that can be used to identify some key strategy points here, because the stock is taking a very strong, sizable downward move at this point. And this has made it much more difficult for people that are looking for possibilities and chances to take long positions in this stock. So here, we will look at some of the thought process that goes into this, some of the fundamental backdrop that goes into valuing these stocks, and then we will also look at some specific price levels, which can be used to execute trades here going forward.
Well, no, it's a great company, Nvidia, Kelly. It just had become too much of a momentum story for us. Made an awful lot of money on it. Stock trading at 40 times earnings. And I think we're kind of in a digestion mode here for AI. And importantly, stocks like Nvidia, once they become big momentum stories like that, they just don't need solid earnings growth and order growth, which I know a lot of bulls like to talk about, but they need accelerating order growth, accelerating earnings growth. And we're kind of past the acceleration mode here, so at the same time, we're entering the rate cut cycle. I mean, today's news only, cast the final die on that one. So off we go. We've got probably 200 basis points of rate cuts in front of us. These big AI names have done really well when they were the only game in town with rates up at 10% on the 10-year. They don't really need funding, so financing is not important. But the other side of the market that mostly funds itself short, the value stocks, the cyclicals, the small caps, they're the real beneficiaries once rates start to decline. So that's kind of where we want to be right now. And we thought it was time to take some chips off the table on the other side.
So as we can see here, many of the problems with Nvidia stock currently relate to the fact that the forward valuation, the forward PE metric, has become quite elevated and is outstripping its peers by a very wide margin. Whenever you're dealing with a stock that's trading past 40 times earnings, it does become a bit more unpredictable and somewhat unsustainable. And then in addition to that, many traders will start to look for areas to take profits, just as this specific investor did with Federated Hermes. So, here we can see that the stock has fallen to recent lows, which have broken below the prior lows of 102.50, which were established during the July 30 trading session. Most recently, we have seen lows drop below 101.40, and this is a very significant price level, as I've mentioned in other videos, due to the fact that this has now put us into strong contact with the 61.8% Fibonacci retracement of the stock's dominant trending move. So, in other words, we have now retraced 61.8% of this prior rally. And then in addition to that, we're also coming into very close contact with this $100 psychological support zone. So the real question here is whether or not we will be breaking below this $100 mark. And this is a question for investors to be asking themselves going forward. Do you believe that Nvidia should be trading under $100 per share? If that's the case, what actually is the downside target? If we start to look at some of the sub 100 targets here, we can see that the 78.6% Fibonacci retracement comes in below the 90 mark at roughly 89.93. So we can see that this is a fairly substantial move lower from here, given the fact that the Friday close came in at 107.30. To the top side, initial resistance levels really can be found just above the 120 mark, roughly 120.15. Because as we can see, this is a prior price high, which was established during the August 4 trading session, as well as an instance of resistance at the 50-period exponential moving average on the 4-hour price chart. So if we sort of move down here to the 1-hour chart, we can get a bit of a closer look at what this recent trending move actually looks like. And here we can see that the stock is now trading well below all of its exponential moving averages on the hourly time frame. So this would mean that the stock is now trading below the 20-hour, 50-hour, 100-hour, and 200-hour exponential moving averages. This is significant because support levels will now start to be found at lower and lower levels, and this could make it much more difficult to ultimately breach this 120 mark that we saw going back to the August 1st trading session. So overall, these are the two main levels that I will be watching to the downside. If we do see a break below this 101.50 level, roughly, we do really have to ask some very significant questions about whether or not this stock should be trading above or below the $100 mark. From there, if we do start to see more positive activity in the broader market, this could help to support share prices, but we would probably need to see movements higher, not only in the S&P 500 and in the NASDAQ, but in other major technology stocks as well. So this would include companies like Microsoft and Apple, because if we do start to see major declines with those types of stocks, the other Mag 7 stocks, it does become much more difficult for a stock like Nvidia to gain traction as it's trading at these high forward earnings multiples. A 40 forward earning multiple is extremely elevated. And there are many other technology stocks that do trade at cheaper levels from a forward earnings basis. So, the real question here is whether or not investors should be focusing on a stock like Nvidia, or possibly, moving forward with smaller cap names or more names, stock names with better growth potential going forward. Going forward here, these are the price levels that I would be watching. We do need to keep track of the other Mag 7 stocks, but in addition to that, we have an Nvidia earnings report that's coming out relatively soon, and there are lofty expectations for that currently. The guidance figures from the prior earnings report came in quite strong, so Nvidia has really set a very high bar for itself as far as being able to beat those earnings expectations here going forward. There are also major issues with supply of the product relative to demand of the product, because there's a lot of evidence to believe that Nvidia is not currently able to produce these graphics processing units as quickly as the market actually wants to buy them. So here are some of the factors that I'm watching, and here are some of the price levels that can be used to construct trades. This is the current market update for Nvidia Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.